Welcome back. You're watching Market Fatafat on ET now, and let's continue taking you through the stocks that are moving in trade. We have now Dhwani Patel joining us on the technicals. A very good afternoon to you, Dhwani. Thank you so much for joining us on ET now. And the first stock that you'll talk about is SAIL. How is this one looking on the charts, given the fact that the entire metal sector is a buzz? But do you think this buzz will continue going ahead as well?
Very good afternoon to everyone. And talking about SAIL, the reason it's in focus today is, of course, the entire metal pack is in focus. But SAIL has made a bottom formation somewhere around 125, and from there we have seen it retesting it for 3 times in a row. And from there we're getting a fresh breakout as well on the daily charts over here. So from current levels, one can go long into this one. Keeping a stop loss on the lower side is going to be at 131. On the higher side, given a positional target over here, I'm looking up at 155 as the next one for this.
Alright, those are the targets coming in for SAIL. The whole metal pack is shining bright, but from the finance pack, M&M Finance is in focus after Citi's note where they maintain their neutral rating with a target price of 310 rupees. What Citi is highlighting is that they did conduct a channel check at Mahindra Finance branches and dealerships in Maharashtra, and they see modest underlying personal and commercial vehicle demand in the first half, and that's expected to show an uptick in the second half of the financial year. Now, the product profile has skewed more in the favors of the personal vehicle segment, and dedicated field force at the dealerships is also what they're experiencing. Along with that, their smooth functioning through their smart branches and active trade advances are key differentiators to command high share. All in all, they do find all that's happening at their Maharashtra branches with this channel check, but nevertheless they continue maintaining their target price of 310 rupees, which is lower than the current market price, but the stock is holding on to the gains.
Alright, that is M&M Financial for you. Let's shift focus. Let's talk about Alcargo Gati, and this particular counter is in focus in today's trading session on an intraday basis. Last time I checked, the stock saw a jump of approximately 4.8%. There you go. There was a spike in the stock price, then there on is fizzled off. The reason why is because the company said that they have announced a 10.2% average general price increase, which will be effective from January 1st, 2025. This for its express distribution services. They're saying this is the first price increase in 4 years, which will help offsetting rising costs due to inflation as well as regulatory measures. The stock, however, has given up today's gains, but it is on track for a third consecutive week of gains, Shrishti.
Alright, let's talk about then HDFC Life then, and Dhwani, take us through how you're looking at this particular stock on the technical front and what are the next targets.
Absolutely. HDFC Life, SBI Life, both have been in focus for me, and the conviction more lies here in HDFC for the reason being that we are seeing the rounding formation coming in on the shorter time frames as well as on the daily. It's forming in a higher high, higher low formation, and it's a swing trade coming in from the current levels. The stock is also soaring above its short-term moving averages. From current level going long, 770 is the target that I'm looking up at in this particular counter, given the stop loss that one needs to maintain. On the lower side is going to be of 709.
Alright, so that's the take coming in on HDFC Live. Gaurav, coming back to you. Trent is the counter that is in focus, and why is it?
Well, yes, Trent is its focus, and the reason being that Citi has now initiated on Trent with buy rating and a target price of 9,250 rupees. What they say is that Trent is going to outpace the peers, and this will also drive the street upgrade for the company. They are actually adding organic growth engines, and on back of this we may see revenue growing at a CAGR of around 41%, while profitability can grow at a CAGR of around 56% over the next 3 years. When we talk about the company's fundamental, what they are actually doing is that they are leveraging on its supply chain as well as learnings from the West Side and Zudio. At the same time, what Trend is also doing, which is a unique according to Citi, is that they're turning around Star, and that can be actually meaningfully scale up for other pilot projects as well, including at the same time what they are doing is that including all the positive factors about Trend, they have now added Trend to their Pan Asia high conviction focus list, and on back of this they are being very bullish on the stock. When we talk about the stock performance also, it is up almost 3%. So definitely watching out of this counter on the back of the brokerage note that we have received on Trent.
Alright, that's about Trent, but we also spoke with Manish Sonthalia, who's the Director and Chief Investment Officer at MK Investment, and he doesn't see valuation comfort in the FMCG space right now. He advises to be selective within the consumption discretionary. Let's go across and listen into him.
overall, again, there's not too much of valuation comfort as far as the FMCG names are concerned. Vis-a-vis the growth that these companies are offering, I think I'll be remaining selective on consumer discretionary names. Urban consumer is doing better than the rural consumer as far as the discretionary names are concerned. But I think if there is a good monsoon, you'll also look at discretionary names in the rural sector start to do well. So overall consumption is a good place to be in, but one has to be very selective. Can't be a general, one size fits all sort of an approach as far as the consumer name is concerned.
All right, but sticking with the consumption space, then let's also put the spotlight on Tata consumers. As per the sources tell us that Tata salt prices to rise from the next week, and Tata salt prices per kilo packed is expected to increase from rupees 28 to rupees 30 now. Now, the rising input cost and the supply chain challenges driving the price hike, and the new prices are expected to be applicable nationwide by the next week. So that's the salt price hike that we are tracking, and salt price is expected to rise after a gap of 2 years. And on the back of this news flow, the stock is in focus and holding on to the gains of close to 1% right now.
All right, so that is Tata's consumer in focus on back of that news. But let's move on. Let's talk about Star Health. Why is this one in focus? Is because they've obtained a temporary injunction from a state court ordering Telegram to stop chatbots leaking data. This is from the agencies where we've got. The reason being is the Star Health has sued Telegram after the hacker used chatbots on messaging app to leak customer data. So on back of that, you have Star Health that is in focus in today's trading session. Just to give you a quick background on what exactly had happened is because you had some self-styled hacker actually going ahead and using the chatbots on Telegram app to leak personal data and medical reports of policyholders of Star Health. And on back of that, they've gone ahead and sued Telegram and also got a temporary injunction from the Tamil Nadu court, which has ordered Telegram and the hacker to block any chatbots or website in India that make available the data online. So on back of that, keep an eye out on Star Health.
All right, that's about Star Health. But moving on, Dhwani have been tracking NMDC very closely, as well as the metal pack overall. Take us through what's happening with NMDC.
Yeah, absolutely, Shrishti. Over here, talking about NMDC, if you're looking up at the daily structure over here, where you're seeing a bottom formation around 200 odd levels, and it's sustained for quite some time. And in the recent time also, especially today's session, you're seeing that the stock is soaring above its short-term EMAs, and it's also given a breakout if you check up on the daily charts of a downward sloping trend line. And from there, we are seeing the action building up in this particular counter. On the higher side, 250 is the next target that I'm looking up at in this one, and on the lower side, the stop loss that I would suggest is going to be of 224.
All right, so that is the take coming in on NMDC, but gold has been on a record run. This powered by safe haven buying coming in after the Fed also going ahead with that bumper rate cut. But what's next coming in for the gold prices, and are gold prices poised to sustain this sort of a bull run that they've been seeing? We spoke to Peter Maguire as well as Sabashsachi Ray on that. Listen in.
I think you'd need to see all of the geopolitical tensions subside, and I just don't think that that's going to happen anytime soon. And there's a lot of, I think, the degree of central bank buying has been overwhelming, and retail is right across it as well. So I think it's only one-way traffic, and it seems to be onward and upward at the moment.
All the contours or all the coordinates are favoring the gold price. So if you see what is happening is that, you have seen the Fed has already cut the rates. And not only they have cut the rates, they have also told a roadmap of cutting the rates in the next 6 months to 1 year period. So if this is the highway, what they have told, so gold will run in that highway and it will go and hit new, I think, benchmarks, whatever we are seeing. Not only that, you are also seeing the geopolitical tensions. 2 wars are going on, and in the Middle East, which is one of the biggest gold markets, is already expanding. That if the war is expanding, we do not see that an investor material gold is coming down in any time soon. And not only that, if you see what is happening, demand supply also. You have seen that in India also there is a rate cut recently happening. So in India also demand has surged, the jewelry demand, and also if you're seeing the ETF, etc. demand too, understanding the rally what gold is doing. So all these factors are already supporting the pricing of gold.
All right, but with this fears, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back with more buzzers in trade right now.
Welcome back. You're watching Market Fatafat on ET now. Let's talk about SBI Life then with Dhwani. And Dhwani, how is SBI Life looking to you on the charts? Because most of the move that we've seen in this particular account over the last 3 months are also aided by news flows. But what are the charts indicating? Are the charts also supportive of the price move now?
So, as I said earlier, I'm tracking both HDFC Life and SBI Life. HDFC Life is more of a long-term bet that you can take up on for a couple of weeks to months over here. But SBI Life, on the other hand, is something where you can look up at momentary gains over here, keeping the whole pack in radar over here, and one can go long onto it. On the higher side, 1960 is what I'm expecting in the short term over here. And on the lower side, the stop loss that one has to ideally maintain is going to be of 1850.
All right, so that's all about SBI Life. But let's talk about Uno Minda, and that particular counter, no doubt, now has reversed some of his morning gains. But when it opened up for trading session, it was trading higher by about 2.5% or so. There you go on your screen, as you can see from the charts itself, that the stock has given up all of its morning gains. And on yesterday, post-market, as the company said that their unit had entered into a technical license agreement with Hyundai Mobis, car parts, which is the car parts arm of Hyundai Motors, and the agreement was for licensed products manufacturing. So on back of that, the stock actually snapped a 4-day losing streak, but looks like it's gone back to its actually losing ways right now. So the stock right now under pressure. That's Uno Minda for you. But let's shift focus and stay with the auto pack. Then Hero MotoCorp. Gaurav, why is this one in news today?
Yes, Hero MotoCorp is in focus, and the reason being that now UBS is being a little pessimistic on the stock. What they have done is that they have maintained their sell rating at a target price of 3,350 rupees, which leaves a little bit of downside from the current market price. And what they are highlighting is that they are actually saying that the wholesale volumes and festive optimism is actually clouding the retail outperformance for Hero MotoCorp. They are also saying that the festive strength that we were supposed to see has not aided the full year performance for the company. And at the same time, they have highlighted another thing is that the substantial retail market share loss for Hero MotoCorp. So we have already seen that Hero MotoCorp's market share has now gone below 24% if we see the September 2024 numbers. And on back of this, they are being pessimistic on this stock. As a result, we saw some downtick when the market opened. Now the stock has recovered, but still down almost 1%. So definitely watching out on this counter on the back of the pessimistic note coming up from UBS.
Alright, so that is Hero MotoCorp for you. But let's shift focus to the tech pack then. HCL Tech. Dhwani, how is this one looking in the charts?
The tech pack is in focus for the reason that we are seeing some rebounds coming in today's session over here, and of course HCL pack nevertheless is in focus right now for the reason that consecutively 3 days we have seen the stock has been soaring high in trade. In today's session also we are holding up with a little marginal gains over here. I'm looking up at a short-term trade over here on the higher side with a target of around over here at 1840 levels, and on the lower side the stop loss that you need to maintain is going to be of 1750.
All right, so that is all about HCL Tech. Staying with the IT pack, then Infosys. Gaurav, why is this one in the spotlight today?
Well, Infosys is in focus, and the reason being that company has now entered into a strategic collaboration with Polestar, who is a Swedish electric performance car brand. Now, what Infosys will be doing is that they will be establishing a global technology hub for Polestar at its development center, which is situated in Bengaluru. Now, this hub will aim to deliver electric vehicle software development and validation system across many domains, including infotainment, advanced driver assistance system, which is known as ADAS, and telematics. It will also support Polestar's product management, customer engagement, corporate solution, and other services. Now, Polestar will benefit from this synergy by leveraging Infosys' strategic asset-light model, and at the same time, the assets like engineering labs, design studio, and Infosys Living Labs. And on back of this, when we talk about the performance now in the morning, it was up almost by 1%. It has given up some of the gains but still trading in green. So definitely watching out on Infosys.
Alright, so that is Infosys for you and the reason why it is in focus in trade today. Staying with the IT pack once again, then Dhwani. Wipro, how is the charts looking for this one? Is it looking different to what it was for HCL Tech?
Absolutely not. Everything is in tandem right now for the entire IT pack over here is what I'm looking up at. Even in Wipro, we are seeing that the stock is rebounding. In the last 5 sessions, it's formed a bottom around 530 levels, and from there we are going high up into the trade. And I'm looking up at a target on the short-term basis around 560 levels, giving a stop loss on the lower side at 529.
Alright, so that is all about Wipro. With that, we come to this to the end of this edition of Market Fatafat. Thank you so much, Dhwani, for joining us on the show, as well as Rajesh and Gaurav for taking our viewers through all the stocks that are moving in trade. But as we wind down for on this edition of Market Fatafat, let's hear what Manish Dangi had to say with regards to different asset classes. Why is he cautious on equities, and what is fueling the faith in the bond markets?
It's sort of fairly plausible that rates go further down. As we've discussed a couple of times in last 6-8 months, that rates in India could get to 5.5 or thereabouts. So there is still a runway there. I think I like that space. I think the bond yields in India will be sharply lower in next 1-2 years, perhaps even lower than what we saw in COVID. Gold could be a small allocation. Again, it likes the fact that real yields in US will come down. So therefore, it's done really well already. So to that extent, you should be cautious there, because gold, you have to be worried that it tends to get into these phases where for a long time it doesn't perform. So you never scale the allocation there. There is no coupon in gold, right? So be careful there. Equity is a space where there's a lot of momentum. The margins sort of remains high both in US and India. But the revenue sort of has started to come off. Even EBITDA and PAT sort of in India, last quarter numbers were not that great. So you ought to be cautious, that remains my view. Now, when
so cautious on equities?
Yes.
Bullish on bonds?
Very bullish on bonds.
And neutral on gold?
Neutral on gold. And I can actually, because, we've launched this strategy, I think, from a purely, because I'm more of a macro top-down, what is good guy. And I think it's sort of reasonable to assume that even though India enters in a slowdown, because it's likely that Indian balance sheets are so clean that the slowdown won't hurt them much. So even though the pressure on P&L appears, the margins will come down and disappoint equity markets. Balance sheets are squeaky clean, and therefore they'll be able to service the loans. So if you can get great opportunities in lending, I think there is a decent risk premium to make. My sense is that people who can afford and can move to high yield strategies, ours and many other such strategies exist. I think it's a better place to hide yourself. That's the way to actually play growth or play extra risk premium versus equity right now.
Asset classes. Importance of asset allocation. 80% of the wealth is always created by the right asset allocation. And assets, you have to always look at your portfolio, the asset basket, what you have, where the excesses are, or historically high returns are there. You need to perhaps take some chips off the table where returns have been low. You need to start increasing the weightage. That is the simple meaning of asset allocation. But we move to part 2, which is that according to you, equities, you need to be cautious, bonds, you need to be bullish, and gold, you need to be neutral. So can I say that for next 5 years, equity as an asset class is unlikely to give returns which are in line with historical averages? In the next 5-year return will be lower than historical averages, but for bond it will be higher than historical averages.
So if history were to have a rerun, then all that you need to know is if 5 years have been very good, the next 5 years would be rather bad, right?
Bad means negative returns, no returns?
No. It means very difficult to have negative returns for 5 years, right?
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.